Hello traders, Gary Wagner here, just about 9:30 in Honolulu, 3:30 in New York on Monday, the 26th day of May 2015, and this is the daily report for gold and silver. Dramatically lower pricing across the board in the precious metals markets as the dollar begins to really dominate the trading markets. Equities down, first to gold off about $16 on the day, $11.88 and change. Low $84.80, high $12.0820. Silver also under dramatic pressure, trading off about 30 cents or 1.77% lower on the day. $16.75 is a current, the low $64.50 and the high $17.18. So traders, the move that we're seeing today is predominantly a dollar move, although there's selling as well as dollar strength. We're looking at a daily chart. This daily chart is a dollar index, and when we look at it, you can really see the dynamic move that we've seen on this daily chart, moving up past 97, now at 97.30, call it. And when we look at some of the other indicators that we look at, such as the MACD, you can see that we've gotten a strong cross there. Momentum has definitely moved to the upside. Also, we can look at our stochastics. Our stochastics are set rather fast, and that's why we're getting a lot of these false positives here. But we've certainly seen a buy signal issued in the dollar index. Now, in terms of how that's reacted to gold, we'll look at the Kitco Gold Index. And what you can see when we look at the Kitco Gold Index is out of this move, 1750 is the net change on the day, about 1.5%. $6.65 of that is due to selling in the market, while about $11 of that price move is directly attributable to U.S. dollar strength. So what does this most recent news and a return of a strong dollar really signal for the price of gold in the weeks and say month ahead of us? And my sense is we talked about a head and shoulders pattern that we see unfolding, and we'll look at that chart in a second, but I first want to go to a short-term chart to show you that according to our technical studies, we certainly could still be in line for lower pricing. Momentum index definitely gone to the negative. MACD, if you look at the MACD, it appeared as though it wanted to cross at one point. In fact, let's go ahead and blow that up. And you can certainly see that on this MACD chart right here. It turns back up, but falls just shy of crossing, comes back down and actually does cross here. But look at how this market is dipped in terms of the MACD moving down in the most recent. And then once again, that's very, very short term, which brings us to the pattern that I was talking about last week, which is in essence called a head and shoulders pattern, a straightforward Western technical pattern. But if you take a look here, we've got our head, left shoulder, and right shoulder. And of course, this pattern itself is predicting that we should get lower pricing and in fact break below these most recent lows. So that is one way to look at it, and it is for that reason that not only last week but this week I'm still rather bearish on the market. And yet another way to look at it, and this chart here is a half a day, a standard candlestick chart, but we have put our current Elliott wave count, our short-term Elliott wave count that is in. And when we look at that, really what we're seeing is the possibility that this last move up to about 1230 completed a intermediate or minor fourth, and we are now moving into a fifth wave. According to this, the count that you have is 1, 2, 3, 4, 5, which would take us into our A. We should see a little climb up, a B, and then our final C up. Of course, you're going to see a higher move up on the ABC because we are absolutely in a bear count. So speaking about a bear count, you know, the one market that I've actually been a little bit bullish on has been silver over the last couple of weeks. And really what I was looking at more than anything else was the fact that unlike gold, which was trading in a sideways to down channel, you had silver genuinely trading in this upward slope or upward channel. However, that now looks as though it might have changed. You can see, first of all, when we blow this up, that we have now closed below the lower line of this channel. Now, whether or not that's going to become support and we'll see a little bounce is something we'll have to see as the market unfolds this week. However, I think we could genuinely see some weakness in the market. Now, especially when we look at the MACD, moving average convergence divergence, the one thing, we do get a couple of false positives, but you'll see it's not that many. We really, when we look at our silver chart, we had this one false positive here. We had the opportunity for it here, but it's been pretty steady, and we definitely now have our cross. So the key is that, do we want to look to see how this market reacts as it goes back to the recent lows? Specifically in gold, you're looking at what, about 1282. And my sense is that I want to be able to determine with absolute clarity whether we're going to stay range bound, meaning it goes to 82 and bounces back up to what, 1215, or if it breaks and makes new lows, if we see that head and shoulders unfold. Because if it does, it's going to be an opportunity, and a big opportunity, to short the gold and silver market. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.